Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com, founded it back in 2003 to provide you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms. Like you see here with our 21 SPY and ES mean reversion systems, and of course our famous KISS trend following systems. Nothing out there like it, guys. I will be doing a couple in-depth videos on these, educational videos, and looking forward to that. I think that'll answer a lot of questions and give you guys a good feel for that. But anyway, let's get back to this recording. It is Monday, January 22nd, and this is the Breakpoint Trades newsletter. Okay. Via the table of contents, this newsletter is divided into 6 major sections. I did add a few trade ideas, but honestly, guys, I'm having a little trouble finding a lot of good actionable setups on my scans. That probably tells you something about the general market. And market was up today. The trend remains up. That said, we are starting to see divergences and, just some things to keep an eye on, which I'll go over. Otherwise, key events for this week, again, manufacturing PMI on Wednesday, Thursday, core durable goods, GDP, initial jobless claims, and of course, Friday, PCE inflation data. Also, we got a lot of S&P companies reporting, so be aware of that. And let's go ahead and just get started with things. So before we get into the general market, I'm going to go over some slides here. So here's something that Steve posted on QRA, and QRA is coming up later in the month, and it's something to keep an eye on. Again, if you don't understand what it is, I suggest you Google it. But honestly, it is what started the sell-off from late July into October. And it's also the change in the QRA, what occurred in late October, Janet Yellen. The Fed bought a lot of bonds, which pushed interest rates down, the 10-year, and that was honestly the big driver for that huge market rally the last couple months of the year. Well, QRA is coming up again. Are they going to do the same thing? Or are they going to, for example, sell bonds, which would cause interest rates to go up and cause a pullback correction in the market? So definitely something to keep an eye on. We'll see how that manifests. Let's move on, look at some of these systems. So again, as I stated in the opening comments, I'm going to be doing an educational videos on the systems. So here's a write-up I wrote on the KISS system, kind of what it's doing, some general logic. And I'm not going to go over everything in detail here, but it's a really nice summary here. The KISS systems, what they're designed to do, they're long only. They'll get into the market via their conditions. When they get in, they set an initial smart trailing stop. They'll continually raise that stop, and they'll allow you to avoid very strong market corrections, bear markets. You don't sit there and ride through them. And the system has, again, a variety of trend following logic. It also has even some mean reversion logic to take some very oversold trades. And you can see here, raising its stop up over time and to keep with the trend. It also looks at some general Elliott wave. In an uptrend, your pullbacks in an uptrend are usually 3-wave or some sort of consolidation pattern, such as an ABC. And there's some logic that looks to buy ABC pullbacks in uptrends as well. But again, I'll go over that in a more detailed video, but just showing you some of the slides that I've been making. Here's a great idealized example of the KISS system, something I like to show to family or friends, folks that aren't traders, but have money in the market and 401ks. This is a great example here. This is the 2019-2020 time frame. We all know what happened there. You had the COVID stuff. You had the 35% correction in 1 month in the S&P, and that had never happened before. You had 35% correction in 1 month, and within 5 months, it was back to the highs. We have never in history seen a recovery that fast. Usually when you have a recovery that deep, it might take 1 or 2 years to recover back to the highs. So that was definitely unprecedented times. All the money sloshing around in the system from the government, all the stimulus. We all know the effect that it had with inflation, et cetera. But anyway, enough soapbox about that. But you can see how the system went long there on October 10th, 2019 at 29.70, set initial stop at 28.56, right? Then it raised that stop up over time. The last stop at 32.89 was hit in February, and that was only 4% off the highs. That's not bad, right? And then you had a 35% correction in the market, and then the system got back in 1 bar off the low, nice reversal bar. That's one of those mean reversion strategies that kicked in. Great entry there at 24.77. Remember, it exited at 32.57, and the initial stop was pretty wide there at 21.92. And then it raised it up over time. You can see the system would have exited there in June. Then you had more of just a sideways correction. Again, this is one of these ABC type corrections in a bull, in an uptrend, A, B, C. System then righted itself, went back long, caught another trend, got out. So that's a great example of how the KISS systems work. Again, they're kind of like life insurance for your portfolios. It allows you to participate in uptrends with peace of mind and prevents you from having to go through those 10, 20, 30% market corrections and bear markets that your standard financial advisor would let you go through and just tell you to stay the course. Yes, stay in the course here. It came all the way back, but wouldn't it have been better to avoid that? Buy back in down here, and then now in the fall time frame when the S&P was back to the highs and everyone was back to break even, you would have been up 100%, right? You would have been up, double what everyone else is. While everyone's back to break even, you're up extremely nice because you caught that low and avoided the crash. That's the beauty of the KISS systems. Next, image number 5. So this is right from the website in the KISS STS tables. Again, I'm going to be doing a video on that as well. A lot of you are using that section. I think there's still some of you who are oblivious. You hide under a rock. I don't know. You're not even aware of it, even though you've been subscribers. You're greatly missing out on this resource. So again, this is more of an idealized example, but this is CrowdStrike. The KISS system here went long on August 21st. And since right here, you can see the initial smart trailing stop at 140.50, and it raised that stop 21 times. Think about that, 21 times, did not get hit, got pretty close a couple times, and captured that whole uptrend, and it's still long. It's up, again, over 88%. Again, most of the trades aren't going to be that good, but that can happen. And I've seen even examples where I've seen 30 or more STS stops. So it's a great example. And this is not a back-tested result. This was on the website back in August when this triggered. Okay? We've had a lot of amazing winners. And if you haven't been utilizing this resource, you've been really missing out. Next, I'm about to remove this slide. This talks about the mean reversion systems. I made a slide on those as well, but again, I'm going to discuss that another time. And let's go ahead and get back to the general market. So item number 7 shows the index sector table, what transpired today. Again, the major indexes were up slightly, anywhere from 0.36% to about 0.3% for most of the indexes. The Russell is what led today, up over 2%, 2.1%. So nice gains there. The market was off the highs, obviously, but again, nothing's changed with the trend yet. As far as the 21 market sectors, most of them were up today, okay? So pretty otherwise broad-based rally, mostly. Again, only 3 sectors were down: consumer staples, discretionary, and utilities. Currencies, US dollar up, essentially flat. Cryptocurrency been weak lately, not surprised. Remember, they made that divergent high on that buy the rumor, sell the news, and of course, we saw a massive correction in the stocks even before Bitcoin started pulling back. So that area remains weak. I do think the stocks are starting to look attractive again now, such as Mara, as they've come into a support area. As far as commodities, the general CRB was up 0.4% today. Crude oil up 2%. Natural gas had a nice pullback today. The ag area was up nicely. DBAs finally broke out of that consolidation range. As far as precious metals, well, same old, same old. This area remains weak, as you can see. It's been downtrending quite a bit. One of the toughest sectors, quite honestly, to trade is these precious metal names. As far as bonds, about a 1.25% drop in the 10-year Treasury yield today. Next, item number 8 shows the economic news calendar, which I already went over. Like I said, the big one is on Friday. That's the PCE. You have GDP, initial jobless claims, durable orders, goods on Thursday, etc. Next, image number 9. This shows you earnings. So quite a bit of earnings here this week, as you can see from the names. We'll see how the markets react to that. And let's go and jump into these index charts, folks. So first chart below, item number 10, is the daily snapshot of the 5 key major indexes. So remember, over a week ago, those Bollinger Bands were pinching, and that resulted in another quick pop to the upside. And we're slightly above the upper Bollinger Band right now. Something to be aware of. These last moves that have produced new highs, I don't have a MACD on this chart. I have it on some charts below, but there is now a MACD divergence setting up. Next. Chart number 11, here's the daily chart of the Dow. In the Dow, you can see new high, but you can really see that pronounced MACD divergence. Again, divergence is not a sell signal on its own, but to me, it appears that we're forming some sort of 5th wave high up here. So this consolidation was the move up here was obviously some sort of wave 3, consolidation here, wave 4, and we'll work on a wave 5. That's important because once this wave 5 is complete, then I'm looking for a deeper ABC pullback. So let me pull that up here on my drawing thing. All right. So once we do complete the 4th wave or the 5th wave, I'm looking for a deeper ABC correction, zigzag, something like that. And that'll probably at least take us down to the 50-day moving average or lower. Okay, so that's just something to be aware of. But we appear to be in this 5th wave move now. We'll see how far it goes. Chart number 12, here's the weekly view of the S&P, this channel. Again, finally, last week, we tagged those all-time highs and broke them. That was a magnet that needed to be hit. That's why when we had that little pullback in early January, I didn't think it would be very deep because those all-time highs were just too close. And again, I've looked at the markets for 25 years, and whenever you get close to a major level like that, you almost always tag it, kind of like putting 2 magnets close together, they get snapped together. And so we finally achieved that. And so that means when we finally do put in some sort of high here, I think that'll allow for a deeper pullback. Again, one target now could be this upper channel line. We do have some RSI divergence forming at the moment. Chart number 13, moving on to lower time frame. Here's the daily. Again, new high. We have a doji candlestick today, a little black candle. Again, you can see the MACD is lagging. Like I said, there is divergence now on the MACD on this move, something we did not have before. Again, this strong thrust move up from the October lows was clearly some sort of wave 3, wave 4 consolidation, likely some sort of wave 5. Now, chart number 14, here's the equal weighted S&P. This is lagging versus the S&P. Now that is divergence, but this also, if the market does hold up here for a bit, I could see this making another high. Now there'll be a MACD divergence on that high, but that could be something to play if you think the market's going to hold up here a little bit. Again, guys, one catalyst that could set those 5th wave highs would be that QRA. Next, chart number 15, here's the KISS trend system. Again, I discussed the KISS system above, but here's the current daily S&P, and you can see it's done very well this year. Caught that nice trending move from March into early August. Had a little whipsaw trade there in September or late August, early September. Stopped out, but it did its job. And then it went back long just off the lows, and you can see all the smart trailing stops. Last week, a new one was generated at 46.84. So Profits are nicely protected from that entry, and that's the way the system works. Next, chart 16, here's the 4 time frames we like to follow. The couple things pointing out here on the half day, we have a resistance cycle there. You see the cyan. We bounced from that support cycle. We have resistance cycle on the 130 minute, and we have a DeMark 13 on the 78. So you can see how, also look at the moving average ribbons. Just notice that. See how wide these are? Remember, when the moving average ribbons get too wide, you need some mean reversion action to work those off. So that's a little warning there short term. Chart 17, here's a half day chart. We broke out of that little ascending triangle. Nice move. We are setting up divergence here. Chart 18, here's a 60-minute chart. Just shows you that same ascending triangle. Also bounced off that demand zone. Also, here's a little education. You see the volume by price. You see how big the volume bars? This was the largest area of the volume bars. Well, that's why the S&P consolidated in this range. Okay. Whenever you have those large volume bars, it's going to be important resistance or support. Right now, obviously, we're new high, so there's not much here. This is now a big support. Chart 19, here's a 30-minute chart. Again, nice thrust move after that trend line break and back test last week. My best guess here is this is some sort of fourth wave we're in. Again, the moving average ribbon, see how wide it is? So that's working off here. It needs to be worked off a bit. Chart 20, here's a 15-minute chart with the zigzag indicator. So if you look from this 47.14 low, I can count only 3 waves up. So this is clearly looks like some sort of fourth wave. And if that's the case, I'd favor at least another move for a 5. Chart 21, here's a 10-minute chart that Steve discussed on the weekend. And he's showing the same thing here. We had that inverse head and shoulder pattern in mid-January. Nice thrust up out of it late last week. It appears that that's some sort of wave 3. We're in a wave 4 consolidation. And once that's over, we should have another move up in a 5. And then once we get that 5th wave move, I would be really cautious. Okay? Whenever you get 5 waves up or down, you're usually due for some sort of trend reversal. Next, moving on to the Qs, chart 22, daily Qs up to a new high. Black candle here, doji, again, obviously getting a bit extended. And again, just like the other indexes, you can see the MACD is diverging on that new high. Chart 23, here's the KISS system. Now, important, a new smart trailing stop generated today, moving up from 395.60 to 404.60. So that's a nice jump. System went long, of course, excellent back in October 31st. All those smart trailing stops. If you took that entry, you're wildly profitable. So if the market were to crater here and hit your stop, you made your money. That's the point of the KISS systems. Chart 24, here's the 4 time frames. Again, just like on the S&P, you can see you got that DeMark 13 on the 78-minute. You got a DeMark 9 here on the 130-minute. And again, look how wide those MA ribbons are. So we may need to work those off here short term, perhaps. Chart 25, here's a 30-minute chart. Again, similar look to the S&P. My guess would be this is some sort of wave 4 consolidation that is still ongoing. Chart 26, here's a 15-minute chart with some fibs. So far, all we did is we pulled back a 23.6%. Next, chart 27, here's IWM. Again, biggest rally today, up over 2%, unlike the other small gains on the index is up 0.3%. Nice move here. And chart 28, here's the 60-minute chart we've been showing. Price gapped over this trend line, so basically a breakaway gap. There's also an open gap up here. That's likely a magnet here in the short term. All right, so that does it for the major indexes. Let's go and move on. Look at some of our indicators. Here's the VIX, volatility index, the VIX system with the Bollinger Bands. Remember last week we had a VIX Bollinger Band buy signal in the S&P when it was trading above the Bollinger Bands, closed back inside. So far it's been a nice signal. And you can see the last couple signals, one here and one here. Chart 30, here's a 60-minute chart Steve showed on the weekend. There is an open gap here, so that could be a magnet as well, just something to watch. Some things that are diverging here, chart number 31, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. So while the S&P continues to rally to new highs, this is still severely lagging. Now, it did jump today, but it is well off those highs, so you have a divergence. Chart number 32, here's the NAMO and NIMO along with their indexes. Again, as you know, these were divergent into late December, went below zero, and so far they're still below zero. Okay, so there's still a divergence there. Chart number 33, here's the NAMO with the Qs. And the colors here represents when the NAMO is above or below zero. And you can see generally follows trend. When it's above zero, you're uptrending. When it's below zero, you're downtrending. And it's not perfect, but it's pretty good. And as the Qs have rallied to new highs over the last 3 weeks, this is still below zero, but it is coming back up, but it is still below zero, so still technically a divergence. Next, moving to bonds, chart number 34, high yield corporate market follows this. Right now, it appears to be coiling. Maybe it's some sort of fourth wave coil, perhaps. Chart number 35, here's the S&P versus high yield corporate. Again, the two tend to move together. What you do is you want to look for divergences, like you see here in July when you had a divergence. And of course, October, you had another divergence. Right now, we have a pretty good divergence here. S&P has a new high. This does not. Again, this can be negated, but it is there for now, so something to pay attention to. Next, chart number 36, here's the 10-year Treasury yield. Again, so far it's been moving up in this ABC move, which I postulated. So far, finding some resistance at that 50-day moving average. Chart number 37, here's TLT, 20-year bonds, obviously moving opposite effect, trying to bounce off that 50-day. Next, chart number 38, DBC, commodity ETF, slight bounce today, still in its downtrend, no real changes yet. Chart number 39, DBC on the monthly, still overall in this bigger patch. One thing to watch over time is the moving average ribbon is starting to pinch on the bigger time frame. Chart number 40, crude oil, still in this coil-like pattern. And we'll see if this can break out to the upside. Again, it could still be a fourth wave pattern, but the longer it stays in this pattern sideways, the more chance it has to break to the upside. Chart number 41, natural gas. This is why natural gas is the widowmaker and also why you want to be adept at taking profits. It had a nice rally out of this coil that we showed. Remember, the weather was extremely cold across the U.S. That's what's helped move it up. And now the weather's starting to move back up. You can see natural gas has absolutely cratered. Chart number 42, copper, slight down day today. Again, no real changes in the trend. That wedge played out for a nice pullback. We're above long-term support here. Chart number 43, here's DBA. Like I said, it finally broke out of this consolidation pattern we've been showing for quite a while. Here's the bigger picture weekly chart. Kind of has a big cup and handle look. So if this breaks out eventually, that could be a pretty good move. So this is something to watch over time as well. Next, chart number 45, uranium. As you know, this had a really great move over the last week, finally pulling back quite a bit here. Again, I've been long-term bullish on uranium. Why have I been long-term bullish on uranium? Here's the monthly chart. I became bullish back in late 2020, right in here, around the $11 range. It rallied up, almost tripled, consolidated for a couple of years into a coil, busted out. And I think over time, it could make it up to this range, up in the 40s. Okay. Chart number 47, UEC, the other uranium we've been showing, had a really nice pop out of the ascending triangle. This is the one to watch now, guys. It's pulled back near the 9 EMA. Look at your volume. You had awesome volume to the upside break, extremely light volume on the pullback. So that's generally bullish. Again, you need a trigger, but it is one to watch here to see if this, it's flagging out. Next, chart number 48, Bitcoin. This is the weekly chart. Again, excellent reversal off that 61 fib a few weeks back that we've had in place for, basically a year. Chart number 49, Bitcoin on the daily. Again, remember, Bitcoin made that new high that was extremely divergent. Look at that MACD divergence. that has played out. That sell the rumor, buy the rumor, sell the news. Next, number 50, here's Bitcoin versus one of the major Bitcoin stocks, Mara. I know we have the new ETFs, but I'm talking about some of these stocks that have been around a while, such as Mara, MSTR, Hive, etc. And the problem you also had with Bitcoin is when it made a new high, the stocks did not. They made a lower high, and big divergence there, and you can see that played out for that nice correction. Next, chart 51, here's Mara. Again, hell of a pullback so far, a big three-wave pullback, but into a demand zone. Okay, so it's had a 50% haircut essentially in a month, but it's in a demand zone trying to bounce. This could be a low risk long with a stop right around that 1460 area. Chart 52, here's a 60-minute chart. So you can see the clear potential ABC pullback, and you have potentially 5 waves here, and you have MACD divergence. So to me, this is a setup for maybe a low risk long with a tight stop there right at the lows. Chart 53, MSTR. Again, this has also had one heck of a correction. A little doji today. Chart 54, Hive. Again, all the way up, all the way down. This is sort of a demand zone. We'll see if it can find support there. All right, moving on. Chart 55, US dollar. Again, slight update today. Not much change here. Had a nice move off those lows. So far, a symmetry break. We finally exceeded that trend line last week. And as far as the precious metal area, what can I say? Remember, what hurt gold was when it spiked up to that 2150 back in early December. When that happened, I knew right away, I'm like, all right, this gold area is now going to need to consolidate for a while. And that's what it's been doing. The problem here is the price of the gold or the commodity continues to underperform the stocks. This is the GDX-GLD ratio. It's been downtrending, continues to downtrend. Chart 57, silver. This is the monthly chart. You can see so far for the month down almost 7.5%. Otherwise, longer term, it's in this big 4-year coil pattern. Moving to the stocks, here's GDX. Again, down again today. This is the weekly. Reversed near that downtrend line about a month ago. We'll see if it can hold this area or not. Again, this is one of the toughest areas to trade, quite honestly. I mean, Steve will tell you that. We've traded everything over the last 25 years, and this is the toughest. Once in a while, it'll trend, but a lot of times, it'll just eat you up unless you got a plan. Chart 59, GDX. Again, broke that trend line last week. Now, there is an open gap here from November. We're tagging the top of it. Maybe that's a magnet. Let's see if you can find support there. But again, the onus is on the gold bugs. And quite honestly, there's not a lot of gold bugs anymore. Everyone's into Bitcoin these days. Chart 60, here's the 2-hour view of GDX. Again, you can see that open gap from November. We're right on the top of it. We'll see if we need to fill that or not. All right, let's move to trade ideas. So following up on some of these, here's NVIDIA. I put this out on the watch list 3 weeks ago, this ascending triangle, and it just continues to be up, and away. Congrats if you've been riding this. Excellent move. It is getting overbought here, but you can just simply trail your stops up. Chart 62, Microsoft was the other long idea I put out at the same time. Excellent move from that tight coil. This was picture perfect coil. Coil into the 50-day. Chart 63, BDTX, still on the watch list from a week ago, never triggered. I'm going to keep it here unless it breaks the support here. I have no interest in shorting this below 2.5. Chart 64, let's go ahead and move on from that one. Chart 65. Chart 66, SMCI, been on the watch list for a while. It rallied, it broke out of the coil, pulled back. News came out, and it had a massive pop late last Friday. So I hope a few of you are still in that because that was one heck of a trade. Look at the volume on that. The news was really good on it, and that's why it popped. Chart 66, Cisco, breaking out of a little ascending triangle here. there's an open gap back here in November that could be a magnet. Jobber 68, DPST. This is the 3-time directional banking ETF breaking out of this channel. If you think banks are going to go higher, this is an easy way to play it. Jobber 69, BLFS, been on the watch list for quite a while. Tight coil. Triggered today over that coil, came back. I bought a little bit of it. Again, if you're long, like I am, just put a stop. Logical stop could go right at the low of this coil. Jobber 70, TJX. Here's a new idea. Resistance is that 95, 90 area. If it breaks that, easy target of 100. Jobber 71, SNPS. This is one I made on Sunday. I did not post it. Unfortunately, I had a big pop today. This would be the target area, this supply zone just above here. Really nice volume coming into it today. Jobber 72, snow. Kind of a coil setting up off the highs today, but I could see this trying to make a new high. Jobber 73, frog. Also pulling off those highs, but overall the chart looks fine. Jobber 74, Hershey, coiling here. This could go either way. It could be a low risk long here with a tight stop. If it breaks support, you could do a short, either one. Jobber 75, Exxon Mobil. As you know, the energy areas had a nice correction. Here you got a bunch of dojis together. You could get out of aggressive buy just over the top of this doji with a stop right at that low. Jobber 76, Pitney Bowes, trying to break out of a coil on some expanding volume, looking pretty good. Jobber 77, HRTX, this is a 60-minute chart. Nice pattern here, kind of flagging. Cup and handle look, resistance is 237, so a cheap one for you. Jobber 78, Lab, bull flag setting up, looks pretty decent. And the final one, Jobber 79, RVSN. Nice volume today, low price stock. I think it's some sort of biotech. Be careful with it, but maybe it gives you a quick trade pop. Target area would be up here around the 350. All right, guys, that'll do it. We'll see what happens tomorrow, and that's it. Again, thank you for all your support, and if you have not been utilizing those KISS systems, start using them. They've been kicking butt. Take care.